Greetings, members, one and all of the Salivation Nation. It is my honor to bring to you Mr. Keith Neumeyer, who is the CEO of First Majestic Silver and also the chairman of First Mining Gold. Welcome, Keith.
Well, it's nice to meet you, Sal, for the first time.
Yes, sir. Well, I wanted to talk a little bit about the state of silver in this day and age. A lot has been happening within the last couple of years. As you know, we had the silver squeeze movement all over social media. It seems like there has been a bigger interest in silver than ever before, I think, at least since I've been keeping up with silver. Now, First Majestic Silver is a company that you started back in 2002, I believe, and you've seen a lot of changes from that end. And one of them is mining as a primary silver mining company. Can you talk a little bit about that and where things are going with primary silver mining now?
Well, sure. Well, I put the business together, as you said, 2002. So this is our 20th year in business. This year, we'll produce around 28 million silver equivalent ounces, mostly out of Mexico. And we've got 4,000 employees and so on. And, we've grown a lot over the last 20 years. One of my biggest struggles is really in educating people on the importance of silver. Right from the beginning, I keep hearing silver's a poor man's gold, and quite honestly, it's not. Gold is gold. Gold is money, and I think people should own gold. It's the granddaddy of all currency. But silver is a very unique metal, very misunderstood metal, and I look at it as a strategic metal, meaning that this call we're doing today. And virtually everything that everyone does on the planet on throughout the day, through their 24-hour day, requires silver in some form. And what I mean by that is we don't realize, or I realize, of course, but many people out there don't realize that everything in their home, all their appliances, the electrical systems in their homes, your automobile, all your technology, all the devices that you rely on a daily basis, all have some silver in it. And this year alone, well, pardon me, 20, because we don't have the 2023 stats yet, but 2022, the miners produced about 850 million ounces of silver worldwide, and we consumed as a human race 1.2 billion ounces of silver, creating the largest deficit ever in recorded history. 2023, we're going to be producing the same amount of silver, 850 million ounces of silver, because the miners can't produce anymore. We're at our limit, and yet consumption is anticipated to be around 1.4 billion ounces this year.
I had read that report from Metals Focus from the Silver Institute's report about projected demand for 2023, and then we get a story out of China that their opening back up has not happened as fast as they had hoped, and that kind of sent silver prices down. But that's probably only temporary. You're hearing about sooner or later that market's going to come back online, and then you're hearing what I heard recently about solar panel photovoltaic technology, where they were going to actually be requiring more silver per cell than ever before with this new technology. I did a video about it recently, which was quite fascinating to read. And this stuff is going to come online fairly soon. They say some of it within the next 6 months, which I think backs up this idea that silver demand will increase. Silver has a dual role as an industrial metal, but it also is a monetary metal, I feel. And there's a great demand for things like the rounds and bars that you see out there and stackers, but a lot of it, over 50%, is used for industry. And that's kind of been the hard thing to predict in terms of silver's price. And there's a lot of psychology in the markets that weigh on it. But mining silver as a primary metal, there's not as much of that happening nowadays, isn't there?
Well, there's not that many silver companies out there. And, we could build our gold portfolio quite easily. If I wanted to go buy a gold mine tomorrow, there's a list of gold mines that are available for sale. And we could build up our portfolio of gold mines and then become a gold company. Many mining companies get frustrated because, they started their business many, many years ago. And I don't want to name names, but there's, your listeners probably know the companies out there that call themselves silver companies, yet, most of them, well, all of them, but First Majestic, produce much less than 50% of their revenue from the sale of silver. And they're more, some of them are base metal companies selling zinc and lead. And yes, they sell some silver, but maybe 20% of the revenues are from silver. We're in a unique spot. We're over 50% of our revenues from the sale of silver. The other metal we sell is gold. We just sell two metals, silver and gold, and we're happy doing it. We're love to expand our silver portfolio, and we're always looking around the world for the next silver mine to buy, but they're just very hard to find. One of the things your listeners should know is that if you look at the mining ratio, which some people say, oh, it doesn't matter, but I think it hugely matters, because we're trading at about 85-1. So what that means is for gold prices at 1950, divide that by the silver price, and you come up with about 85. Yet mining wise, we're only mining 7-1. So for every 1 ounce of gold being mined worldwide, the mining sector is only mining 1 ounce of silver. That tells you that silver is much rarer than the market is pricing in. And that's where I think the big change is going to occur. And I think, the Reddit crowd helped bring some education in the marketplace. And since that whole Reddit squeeze, the sales of silver has increased fairly dramatically because people are waking up to the supply demand fundamentals of this very, very important metal.
It is fascinating. And when you look at all-in sustaining costs with increased fuel prices, with inflation, supply chain issues, when you talk about silver being mined primarily, what is the all-in sustaining cost there versus the all-in sustaining cost of silver being mined as a byproduct of other metals like nickel, lead, and zinc?
Yeah, I don't know the answer to that, because every mine is different. Like if you have a mine that produces 100% silver, which we do, that mine would have costs of anywhere from $16 to $18 an ounce. So, at current metal prices, it's making money. But if you have a gold component, as we do in a couple of other mines, we'd be producing the silver at $12 to $13 an ounce, because the gold is paying for part of the cost of production of the silver. So you credit those costs of production of that other metal to your cost for the silver. And every mine around the world is different. And I said earlier about some mines that are producing lead or zinc, they are producing silver, but they credit the cost of the production of those metals against the production cost of silver, and they come up with their all-in sustaining cost, which is published to the public markets, and that's what investors see. But it's not a fair measurement, because every mine is very different, and it depends on the mix of the metal coming out of those mines.
Yes, it fluctuates, but typically, silver mined as a byproduct of other metals is much cheaper than it is when it's primarily mined at a much greater percentage, like in your case. Fascinating. That's interesting. And I think that's good for our viewers to know, especially when they realize, where the price is now, the spot price of silver and how it fluctuates. And a lot of that is driven by supply and demand, but also just about people think it's going to go, like this perceived demand or lack thereof it in China for right now. The markets react to the dollar strength against other currencies and other factors. But sometimes silver trades as an industrial metal. Sometimes it trades along with gold. So that's why I think people get frustrated by the price. And a lot of that flies in the face of, like what you're talking about, the mining ratio, the 7-1 as opposed to the 85-1. And I think a lot of that is because of the push and pull of the industrial demand or the perception of it.
Yeah, no, I would disagree. I'd love to think that's real. I'd love to think the supply demand fundamentals actually drove price, but it doesn't. The consumption of silver, since I put the company together back in 2002, has grown substantially. We had silver go from $5 when I put the company together to $50 in 2011, and from 2011 it went all the way down to 12 in 2015, and then it fluctuated between really 14 to 18 for the next few years, and it didn't get back into the 20s until the last couple of years. And we had 27 a few months ago, and now we're back at around 23 or 24. And I said earlier, there's a record deficit of silver right now. There was a deficit last year of 250 million ounces. There's a deficit this year of over 400 million ounces. The deficit this current year, I should say, is likely going to be higher. We don't know the number, but call it 500 million ounces. So how do these deficits not affect price? The reason why it doesn't affect price is because we price our metal on paper markets, and the banks move the paper markets around at will. And as miners, we don't have control over price.
Yeah, there's a couple of hundred derivatives versions of silver than there is for every ounce of silver traded physically. Yeah, that's right. And we saw during the high demand for physical bars for quote stackers out there, where that price separated. In other words, dealers, if you go to sell a silver coin, and even nowadays with American Silver Eagles, those are trading for higher when you go to sell them than your regular silver ounces. So there's that kind of separation that we're seeing. But I agree with you completely that derivatives, that is one of the things that's driving the exposure to silver's price, which is driving the price in and of itself, because those are not backed by actual physical ounces, unless you trade the PSLV, the Sprott's version. But otherwise, the SLV and others, they're not really backed by the physical.
Yeah, there's about 1 billion ounces of silver trades per day in the paper markets, and the mining sector produces 850 million ounces per year. So that's a lot of leverage, and in my view, it will break because I think the physical market is very important, and if these banks can't ultimately find the silver to cover their contracts, and people ask for deliveries, and we see people asking for more and more deliveries off the COMEX. We see the warehouse supplies dwindling. We're seeing less of the games that we used to see, with the JP Morgan lawsuit and the other banks who have been implicated, in some of the, nefarious type of trading, spoof trading, and so on and so forth that's gone on, in the paper markets, not in silver, but markets right across the board, whether it's stocks or other commodities or interest rates or what have you. These banks, take advantage of markets when they can, and that's their job, I suppose. They're trying to make money on the markets, but when it crosses the line, to manipulating price, because they're offside in a trade and they're trying to, get others to make trades for their advantage, then you can start to say, okay, well, there's real manipulation going on. And that's why we've seen some of these lawsuits. So I am quite optimistic that we are getting into a better marketplace whereby we will be seeing less of these, big banks getting, involved in some of these, enormous short trades and short squeezes and so on. And I think that eventually, the miners will, get a better price for their metal, and that's why, I'm the first to say, triple digit silver. And I came up with that phrase, I don't know how many years ago now, over 5 years ago, and I've seen others now copy it, and so I think people are realizing that, hey, this metal is very, very critical, and it is mispriced, and people are coming into this market and buying this metal. And I'm more convinced today than I ever have been that we're going to see triple digit silver.
I believe you even have that stamped on a 100-ounce First Majestic bar. This is a 10-ounce First Majestic bar. This is a double-digit silver, but yeah, I don't have the 100-ounce version, but I think that was pretty neat, pretty clever.
Well, people can come to our website. We actually sell T-shirts that say triple-digit silver on it. So I think we basically give them away.
Right. Looking back at the kind of the mining sector, what is your outlook for primary silver mining as far as, do you think that's going to dwindle? You mentioned that there's very rarely do you see somebody that's much over 50% mining silver, and what defines a primary silver miner, and where is that? Because I've read that it's dwindling fast.
Yeah, I think, well, it's, other silver companies may differ in my view, but I think that if you're over 50% from one metal, that's your primary metal, that's your primary revenue source. If you're 50% gold, then you're a gold company. If you're 50% silver, you're a silver company. What investors need to know is that, when you're digging in 500 meters under this, Earth's surface into rock that's got metal in it, there's never just one metal. There's going to be other metals, and silver comes with other metals. Silver comes with zinc and lead and gold and copper. And so, all mining companies are going to be producing some quantity of other metals. It's almost unavoidable, unless the mining company decides to throw the metal away because it's not economic, which does happen. And in our case, we've got a couple of mines where there is small trace elements that are like selenium and copper to a small degree that we don't even process. We just throw it it just gets put into the waste because there's not enough there to make it economic. But in some cases, in the case of gold, if you're lucky enough to have a little bit of gold in there, the gold will pay for itself, and it does pay for some of the costs associated with silver mining. But if you look at the whole space, there's maybe 10 or 12 companies that call themselves silver companies in the world, and there's some good companies in there. Don't get me wrong, but we're definitely up there in the top one or two of the purest of the entire space.
Right. And speaking of the overall space of silver mining, you alluded earlier that you think that we maybe have reached peak silver. I know it's very difficult to kind of predict because you don't know what's going to be discovered. There could be a copper mine and they find a whole bunch of silver in it down the road. But just overall, your sense, do you think we've reached peak silver mining?
It all comes down to price, right? And there's metal in the ground for sure, but how much does it cost to take it out of the ground? And it all comes, price and grade. So grade, for your listeners' information, when you pull a ton of rock out of the ground, you want that ton of rock to be worth more than what it costs you to take the ton of rock out of the ground.
Right.
And that all depends on how much metal's in that ton of rock. So that comes down to grade of the metal. So in silver, a good grade is 100 to 200 grams, sometimes more than that. So what that means is that they call it 300 grams because it's easier math. So 300 grams silver, which in some cases we have, that's 10 ounces of silver in a ton of rock. So 10 ounces at today's price is about $240 value of that rock, that ton of rock, $240. And so it's going to cost us, probably call it $100, to process it into a dory bar. And then that dory bar is going to be shipped to a refinery, then produced into 1,000-ounce bars. And there's another cost associated with that. So, there's decent margin. So, at $240, we're making, 50% margin or thereabouts. But if your grade is 100 grams, they only got 3 ounces in that ton of ore or ton of rock. That's only $100 or $80. So $80, that's going to be tough to make money with 3 ounces of silver in that ton of rock. So you might leave that rock behind for another day. You know it's there in the ground, but you say today it's not going to make money, so let's leave it there for the future. And that's what mining companies do. And so when you ask me the question, what's it going to take to get more supply out there? The mining sector knows where the ounces are, but at current metal prices, it's not economic to pull them out of the ground. So all of a sudden, we have $50 silver, then all of a sudden production can then start to go up because the mining sector will feel confident that they can make the necessary investments to pull that ore out of the ground that they couldn't do previously economically. And, but prices haven't moved. And so that's why production's been flat. We peaked out in 2016 at 880 million ounces of silver worldwide being produced. At COVID, it went below 800. It got down to 760 million ounces of production that year. I think it was 2020. And then it's been slowly increasing since. And this past year was about 830 or 840 million ounces. So call it 850 million ounces. Flat line is kind of the world maximum production at current prices.
Since 2014, you've ventured into the gold mining sector. Can you tell us a little bit about First Mining Gold?
Sure. Well, I've been in, the gold sector for a while. We do produce, First Majestic does produce some gold, and and that's a good thing because it helps pay for a lot of our costs. But I love silver, and I'm a big silver bull, as you know. But I did, the markets got extremely weak in 2014, and I think it's probably the same as it is today. The valuations of the mining sector today are pretty ridiculous. Like, you look at First Majestic's share price, for example, it's around $6 US, and only a couple of years ago it was close to $30. So and it's just not First Majestic; it's the entire mining sector has been sold off, despite the fact that metal prices are reasonable. We've got gold at almost all-time highs, and silver, not doing that bad either. But back in 2014, when we had seen similar valuations, where there are companies almost on their deathbed, almost going bankrupt, I decided to put together First Mining Gold, and I'm the chairman of that company, founding chairman, and ended up buying 8 mining companies or gold mining companies and merged them into what we called First Mining Gold. And it's run by a fellow named Dan Wilton, who's an ex-banker at National Bank, and he's a really good guy, and it's cheap. The market cap was $600 million when I put it together back in 2016, because it was quite an exciting business, and people were getting pretty excited about it. I raised quite a lot of money for it back then, and then since 2017, 2018, the stock has been under some pressure. I think the market cap today is probably 150, 160 million. So it's, down at some pretty cheap prices. I've been buying it myself over the last, I keep adding to my position every quarter. I buy a little bit more, and, with some spare change that I have, if I have any. And so I try to keep buying it because it is so cheap. But it's something for people that are looking for a developer, because it's not a producer. So developers are a different world. There's 3 types of companies in the mining sector: exploration, and those are the ones that really rely on drill results. And drill results can kill you or make you. And it's almost and I do invest in exploration companies for sure, because I am in the mining sector, but it's the riskiest part of the space. And it's almost like going to Vegas in a way, right? You can just like roll a dice and cross your fingers, and hopefully they hit. And when they do, you can do quite well, and it can get quite exciting. A development company is a company whereby they've already done all the drilling. They know how much gold's in the ground. They defined it. They say, okay, there's X amount of millions of ounces there. Now we're going to build a mill, and that takes time because you need permitting. It takes lots of approvals, lots of money, of course, and lots of time. And that's the development sector. Less risky than the exploration sector, but it's a long game. When you buy those companies, those developers, you basically have to wait for the whole process to go through, and it takes sometimes up to 10 years. And if you're patient, you can do really well, because when a developer finally starts breaking ground on his mill with all the permits in place, the stock re-rates, and that's, if you can catch it, sometimes you'll make 200, 300, 400, 500%, maybe even more than that. And as they get in production, then they become a different company again. They start getting valued on production and costs and profits and so on and so forth. So, First Majestic's in the producing space. We're listed on the New York Stock Exchange. First Mining Gold is in the development space, listed in Toronto.
Very good. And I think you mentioned something I think is important, because this is not a sponsored video, but I've done sponsored videos in the past. And one thing I always note, that one thing to look for in a mining company is, what is the CEO and the chairman doing? Where are they putting their money? Do they have skin in the game? I think that's crucially important in making a decision whether to invest or not in a company.
Absolutely. It's one of the first things I do. There's a document called the Management Circular. Every public company has to mail this to shareholders every year. And you can get it on CEDAR or EDGAR in the US, or CEDAR in Canada. And these are public documents. Go and have a look and see what the CEO owns, see what the chairman owns, and see if these people do have skin in the games. If their only comp is their stock options, they don't have any money in the deal, right? And it surprises me how some of these management teams, just expect investors to invest in their companies, and they don't even own any stock themselves.
Right, exactly. Well, final series of short questions for you. One thing about my channel is I like to be as realistic as I can about silver, because I believe the metal sells itself. So I don't like to kind of bloviate too much about it. I like to look at the fundamentals and look at it from all sides. But I've been pretty bullish in my predictions the last couple of years, and I'm do them just for fun. I'll give you, for instance, I've been wrong the last 3 years. I made predictions: $30 in the first year, $29 in the second year, and this year I'm predicting $28 silver by the end of the year. I might be wrong again, but what is your prediction for silver by the end of the year, and where do you think it will be in 5 years from now?
Mhm. Wow, I've been wrong as well, to be quite frank with you. When I put First Majestic together, it was silver was $5 an ounce and gold was 250 an ounce. And I sensed that was the bottom, which it was. And I told people at that time that I think silver would reach its old high of $50 an ounce, which it did. It took 9 years to do it, but it eventually did get to $50. What I didn't predict is that silver would go from 50 to 12, and that was pretty shocking for us because we're producing silver, and that's a big knock on any one's financial statements. Nevertheless, we got through it, and today silver's in the $25 range. It got up to $30 during the Reddit squeeze, which was pretty exciting. But there was a wall there, and that there is a short position out there. So the paper market doesn't really want it to get there, and they resist it, as much as they possibly can. But I think fundamentals are going to take over. I think the supply demand fundamentals of the metal will be realized, and it will be headline news. And then once it becomes headline news, then the sky's the limit. And I think $28 to $30 silver by year end is reasonable. It's hard to predict whether that's the case or not, but I'm a $3,000 gold guy. I think gold should be 3,000, and ultimately gold could be as high as 5,000. Why are the central banks buying so much gold these days? Why? It doesn't. They buy more gold today than they ever have, and silver will get dragged along. And what goes first? I think the ratio will compress. I think silver will outperform gold, but you need gold in a healthy market. You probably need oil prices a little bit higher as well, and you need this whole commodity sector to start to turn around again with copper and other metals improving, and then it's going to just be all of them are going to move together. So I think copper's $10. I think oil's 200. I think gold's 3,000 to 5,000. I think silver is triple digits, and call it maybe we'll never see 7-to-1 ratio, which I think it should be trading at. So $3,000 gold at 7-to-1. That's what that is. That's like $250 silver or something like that. I wouldn't project that, but those are the kinds of numbers that could happen. And whether that's a spike, whether that's healthy, whether it be long term, probably not. It would probably be one of these peaks, and that would be the end of the bull market. I don't know. I don't have a crystal ball, but I think north of $100 silver over the next 3 to 5 years, I think is reasonable, based on the demand. We've got two industries, the solar panel industry and the electric car industry, consuming 30% of the world's supply of silver right now. And that's what's been driving this deficit. As I said earlier, we've got over 400 million ounce deficit the last year. And that's going to expand even larger this year. We don't know the number yet, but it's going to be bigger. And where's this silver coming from? There's going to be a squeeze, and it's going to drive prices, and it's just a matter of time when it happens.
No question about it. Silver is the most versatile metal on the periodic table. So there's more uses that silver is involved in now than ever before, and even photography is making a comeback. So it's pretty remarkable. And so the demand fundamentals, I think, are there, and it's pretty amazing. And I'm kind of skeptical about where price is going to be 5 years from now. I'm probably not as bullish as you are, but like I said, I think silver sells itself sooner or later. It's going to, at least I think it's going to preserve your purchasing power and preserve your wealth at the very least. And depending on how you buy it and how you invest in mining companies or what have you, I think people tend to do well with it if they do it with intelligence. Thank you, Mr. Neumeyer. This has been fascinating. You talked about you don't have a crystal ball. I have one, but it's made of glass and it's in storage somewhere. I need to pull that thing out. Do you have any other closing thoughts for us, or any other things you want to share?
You know, I could talk all day about silver. I love the metal, and I do talk a lot about the metal. You know, one stat that maybe your listeners would be interested in is, you know, there's 1.2 billion automobiles on the surface of the earth today. The automotive industry produces about 70 million cars per year. That's down a little bit because, you know, the economy around the world is not as robust as it was. But, you know, back in 2019, the automotive industry produced 85 million cars that year. So we're down about 65, 70 million cars today. Of those cars, 10% are electric. The automotive industry consumed around 60 million ounces of silver last year to produce those, you know, call it 70 million cars, of which 10% were electric. Now, and governments around the world are wanting to replace the entire fuel combustion fleet on the surface of the earth with electric vehicles. And they want to do it by, some say 2030, others say 2040. None of those numbers are realistic. It'll take 50 years to replace the current fleet with electric cars. But just do the math. You know, if you are producing 10 million, well, actually less than 10 million electric cars and consuming 60 million ounces of silver, you know, how long will it take to replace that 1.4 billion cars sitting on the earth, and how many ounces of silver will it take to actually make that change? The numbers are quite staggering.
Sure are. And silver mining will continue. And as long as there is demand for silver, they'll keep pulling it out of the ground. They'll keep exploring for it. They'll try to find, there's new technologies to try to mine silver. And who knows, artificial intelligence may be a part of that in the future too. And that'll help streamline things even more.
Well, AI takes silver.
Yeah, right.
AI won't work without silver.
That's right. Exactly right. Well, very good. Thank you, Mr. Neumeyer. This has been a fascinating discussion. I want to extend a multitude of gratitude to you for sharing your thoughts with us, and extend a multitude of gratitude to all of you for taking the time to watch this video and interview, and encourage you to please rate, share, comment, and subscribe.